So we are obviously seeing a pretty ferocious bounce back here today with the S&P up about 2%, the Nasdaq up 3.5%, and the Russell 2000 up 3.31%. Some of our favorite stocks that we have been invested in for over the past year that have gotten absolutely beaten into the ground are starting to see a bit of a recovery here over the last 2 days. And the reason for this recovery is actually bad news out of Fed Jerome Powell. Fed Jerome Powell said he cannot control a soft landing and really was sending the message like you're not going to get one, basically saying we are going to get a recession. Now, the markets were firmly pricing in a recession, so the fact that Fed Jerome Powell actually came out and said what the markets have already priced in was actually a very bullish thing, and you are seeing this knee-jerk bullish reaction based off of that. So we need to talk about, is this rally actually going to last? Get into a little bit more depth what Jerome Powell did say, take a look at the news for next week, potential, good and bad data that could come out, as well as the fear and greed index, go over short interest of our favorite stocks, all of that good stuff. So if you guys find value out of this video, hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Thank you guys for tuning in, and make sure to get your free stocks down below in the description. Not a bad time to get yourself some free stocks considering almost everything is on sale. So like I previously said, Fed Jerome Powell showed a lot of competency, basically agreeing with the markets. The markets, with the Nasdaq down 30% yesterday intraday, was saying, hey, the economy is not so good, things are not going to be good. So why was the Fed essentially saying, hey, we're going to hope for a soft landing, we think there's a really good chance, so on and so forth. Inflation, we need it to come down to 2%, hopefully, 3 to 4% by the end of this year. The markets were firmly disagreeing, and that's why you've seen a sell-off after the last Fed meeting. It's like, if the markets are so far disconnected from the Fed, something is wrong there. Either the markets are wrong or the Fed is wrong, and usually the markets are not wrong. Usually the Fed is wrong. So now you see the Fed kind of ceding to the markets, just saying things are not okay, things are probably not going to be good. So that in turn turns into a bullish thing now that we are more so on the same page with the Fed. But at the same time, Fed Jerome Powell, and this didn't get enough credit in my personal opinion, Fed Jerome Powell said if inflation does not go down, then hey, we will raise rates even more than we project right now. But he also said if economic data starts to slow down, we start to head into a recession, and inflation does start to come down, that we will not raise rates as aggressively, and we will reevaluate the situation every time new data does come in. So I think that was very much overlooked by the markets, but I do think under the surface, if you're considering algorithmic trading programs account for most of the volume on any given day and they really control the markets, that's what is playing one of the bigger roles in why we are seeing this bounce today here in the markets. Just a simple fact. That's a simple fact. Bad news turned out to be good news for the markets because the markets were already expecting even worse news. So we'll see if any new comments come up by the Fed. We have a couple of Fed speakers throughout the rest of the day today, and those comments definitely will move the markets. Now, as far as the fear and greed index, keep in mind, we are still extremely fearful at a 12. Even 1 week ago, we were at 16. So even though we have bounced today quite dramatically, about 3.5%, like I said, in the Nasdaq, you're still extremely fearful in the markets overall, and I really don't think you're going to see a lot of support for this bounce until we get some kind of good data, which is going to be inflation coming down, the Fed potentially U-turning, or just really good economic data overall, which we're not really going to get too much of that this week. We will get a couple key points, which I will go over for you guys here in this video, but all of these basically indicators of the markets besides the VIX is in extreme fear territory. The VIX is actually neutral, coming in at about 29.33. Now, a lot of people were saying that we cannot find a market bottom until the VIX really gets above 30, around 40. Now, in my personal opinion, if you understand the VIX, and the VIX is basically the the fear gauge, right? It monitors the amount of puts to calls on the S&P 500. The higher the VIX is, the more puts that are on the S&P 500. And puts are considered not a gambling tool, but insurance. So it's like, why would you buy car insurance or home insurance if you did not own a car or a home, right? Use that analogy in the stock market. I don't think a lot of people are too heavy in equities right now. I think a lot of people have a lot of cash. So for an example, if you had 50% cash, 50% stocks in the stock market, what's the point of even buying insurance on that? You wouldn't buy insurance on half a car, right? So I don't think there was a huge need to go out and buy a lot of puts, and I think that's why we are actually seeing this bounce without the VIX actually breaking out into a new high. There's no point, in trying to protect a portfolio that is mostly cash. If you're in cash, you're already protected, right? You haven't really seen this market downturn, obviously, in the same way. You can argue inflation all you want, but when it comes down to it, if you can buy 5 times more shares in some stocks than you could have a year ago, have you really lost money to inflation? Probably not. Now, if you're out there having a hot girl summer, going crazy, going wild, and traveling and all that, then sure, you lost money to inflation, but not in the stock market. The stock market has been very deflationary as of late. So there is that. All the indicators still in extreme fear. So point is, there's still a lot of room to have a quite substantial bounce here still in the marketplace. And I want to see where we end up by the end of the day today. If we do actually break down and hit a new low for the day heading into the close, that's not going to be a good thing. But if we can actually rally into the close, somehow find a little bit of steam here in the last 2 hours of trading, that will be a very, very bullish thing heading into next week. Because after all, if you're going to sell out and de-risk your portfolio, you do that on a Friday, because anything can happen over the weekend. This is as old as the stock market is itself, this saying. You do not want to hold over the weekend during times of volatility. So if you essentially see a lot of people sell out heading into the weekend, like you're starting to see a lot of selling actually coming through right now, then that is not a good sign. If you see the opposite, somehow a lot of buys start to come in and the stock market does start to rally, that is going to be a very, 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 very bullish thing. And that is the biggest thing that you guys need to pay attention to if you have trades here in the markets going into next week. I'm not sure why we are actually selling down right now, but taking some pretty big candles to the downside. So very important to pay attention to that. Now, the data that we do have for next week is actually very, very interesting. So you have virtually nothing on Monday that will move the markets. Now on Tuesday, you have retail sales month over month. That could be very important to kind of give us an indication of, are we heading into recession or are we not? Retail sales are going to be a very important thing to watch as far as potential recession indicators. And then on Wednesday, 8:30 in the morning, you have some real estate data, building permits, APR, housing starts, APR. That could move out around some real estate stocks to a certain degree. On Thursday, you have existing home sales, again, more real estate data. And then on Friday, you don't really have too much. You do have the oil count, so that could be big. The rig oil counts for obviously oil, so that could be good for oil stocks to a certain degree, but not too much actual activity for next week. Lots of real estate data, but that is pretty much it when it comes down to it. There's nothing that is too mind-blowing. So really, based off the sentiment here, we're either going to see that continued bounce or we're going to see that continued drop, like we are seeing a drop right now, and we're now under 400. So that's really not a good sign that we cannot hold above 400 today. We'll see by the end of the day. That's going to be very, very important. We did hit 395.61 on the S&P at the lowest point today, and we are just breaking down in a massive way right now. Absolutely mind-blowing the way this market is so bipolar and just doesn't understand where to value stocks. And I think the biggest part of that is, when there's fears about growth slowing down and we just had earnings, you have 2.5 months until we have earnings again. If people are starting to expect that companies are slowing down in a massive way, then where do you value these stocks? It's very, very hard to come to a reasonable valuation if you don't know how they're going to perform in the next year, possibly in the next 2 years. So I think once we really do find a breakdown in the markets and really do hit new lows, I think it's going to be due to earnings. Say Apple, if they completely miss earnings and they drop 20%, well, Apple is like 13% of the NASDAQ. So that's going to bring down the NASDAQ by over 1% alone, just Apple, not even considering other stocks. So I think that's the biggest thing that is really going to be the biggest market moving events this year. It's really going to come down to earnings, all things said and done, and as well as the Fed, because after all, think about it. If the Fed raises rates to infinity, it doesn't really matter if companies are still doing very, very well and beating all estimates. The Fed raising rates like that, not good for sentiment, but still, if the fundamental valuations hold up, all things are fine and dandy there, and it looks like we are drilling into, oh man, this is going to be nasty. This could be a nasty close, guys. So not looking so good, not looking so hot here today. Let's just be honest about that. All right, now as far as what AMC stock is actually doing today, we are up 3.88% on the day. It has been a rocky roller coaster, trended up for a while today, hit a high of about 9% positive. Now we have been trending downwards, and I think this is a mixture of a lot of shorting activity as well as a lot of puts that are now starting to come back onto the option chain. Even though a lot of the dollar volume for the day has actually been calls, they're further out the money, so they don't act the same as forcing the market makers to go out and actually hedge out those call positions. But when a lot of these puts that are close to the money are going on the option chain, it makes it very, very difficult for the stock to go up because the market makers have to go out and short the stock, and that is a big thing that is actually happening today. It looks like we will likely close positive, but we'll see exactly what happens with the markets. Like I said, we are starting to go down in a pretty massive way ever since about 1 p.m. Just a couple of hours ago. So we'll see exactly how that does hash out. But like I said in the previous video, watch that $10 support level, see if we can hold above that. If the markets are very bad next week, that's going to be a key. $13 per share, that's the level we want to break out above. $15 per share, I think that's ultimately where our support level is going to be. Through all of this, AMC stock held up very, very well at about $15 per share. Throughout this whole year, throughout all of 2022, $15 per share has been pretty much a floor for a long time. Before just recently, we only closed under 15 3 days, and then we closed back above $15 per share, a clear level of a lot of support. So I think 15 could be a lot of resistance, but once we do ultimately break out above that, $15 level, I think it'll be another solid floor of support. So I want to watch that. The moving averages, like I said, they're up here, 1879 for the 100-day moving average, 50-day moving average at $17.37 per share. Now let's switch gears briefly and then we'll go over the Ortex data, but I do want to call out the crypto markets, and I do think Citadel had a big role to play in actually what happened in the crypto markets. Obviously we have seen a bit of a crash, I guess if you want to call it that, full-on collapsing of a lot of cryptos. Even Tether was getting very shaky at one point, and obviously Terra Luna has gotten absolutely decimated, right? No surprise there. And I think Citadel did play a big role in that, but at the same time, now we are seeing a bit of a bounce back in crypto over the last 24 hours. Ethereum is up 6%, Bitcoin is up almost 4%, BNB up almost 8%, XRP up almost 10%, Cardano up 11.72%. So long story short here, I do think the crypto markets bouncing back here today is helping to fuel a little bit of this bounce back that we are currently seeing in the markets, and we'll see exactly how that plays out. But I think still at this point, you're one bad catalyst away, well, one really bad catalyst away, one bad bankruptcy away, really anything, that's bad, you're basically one stop away from the markets collapsing, or you're one good catalyst away from the markets just absolutely ripping. We have had a lot of bad catalysts as of recently. We have had zero good news in months. I think this has to be a record as far as having zero good news in this long amount of time. Usually you don't go 3-4 months without seeing good news, and that's exactly what we have seen right now. So there's not really a lot for the markets to actually grasp onto, and that's what makes this bounce hard. But I do think what Powell said earlier and yesterday is going to be substantial until we do get good or bad news, and that's going to be the real key. Now, as far as AMC and the actual Ortex data, we'll take a look at the option activity, and we're looking at 19 orders totaling $1.35 million, positive order value of 94%. Obviously, this is a lot different from the positive order value of 42% over the past week, so it is helping us today, but you are seeing a lot of puts still going on the option chain, and that is definitely not helping anything in that regard. Now, you are seeing a lot of shorted shares too on a daily basis, right? You are seeing current short interest of free float at 21.58%. Current shares that are sold short, 111.24 million. Cost to bar max of 6.56%. Utilization at 100%, and days to cover sitting at 3.12. So the situation here, I mean, there's a lot of shorting that is going on. That's a given, right? So not too good. Now, the current short interest, as far as the dollar amount in AMC stock, is 1.24 billion. That's a lot of money that is short in AMC, and that's not considering the puts, that's not considering the market maker shorts they've had to put on, that's not considering, you know, synthetic shares, synthetic shorts, you know, Mary puts, or anything else that you want to group into a basket. That's only the legal shorts that we actually know about. So in the grand scope of things, the situation is a lot worse than we actually think. The short interest is going to be a lot higher. Now, the stock O tracker data, I know we went over this earlier, but I think it's very important to call this out again. A lot more calls that are starting to go back onto the option chain. About 11,000 calls in the money, 203,000 calls that are out of the money, 97,000 puts that are in the money, and 48,000 puts that are out of the money. I don't even have to say this, it goes without saying, but when you see a lot of calls that are out of the money and a lot of puts that are in the money, if you get the stock to go up in a substantial way, that leads to two forms of buying power, right? When the puts go into the money and then back out of the money, market makers, they go ahead and buy stock on the open market because they can get rid of those shorted shares they had to short in order to oblige for these puts. That would be about 9.77 million shares the market makers potentially would have to buy just to de-hedge those puts that are in the money. And you're looking at about 20 million shares that would have to be bought by the market makers if all of these calls went into the money. Even if half of them go into the money, which is very reasonable if we do see a big rally, that's still 10 million shares market makers would have to go out and buy. So we're looking at substantial numbers here, guys. Now, as far as AMC and the actual max pain, we'll go ahead and take a look at that, and then we'll go ahead and wrap up this video, ladies and gentlemen. May 20th, that's going to be next Friday. Max pain is still $16 per share. That's in line with kind of what I expect to happen, what I think could happen, you know, throughout next week. I think we will break above 15, and I think it'll be a bullish week overall. So that is going to be it. Really watch the close. If we sell off into the close, that is not going to be a good thing. If we rally into the close, that is a very, very, very good sign. So hit the like button, subscribe to the channel, do what you guys got to do in that regard. Get your free stocks down below in the description, and come join the trading community if you guys want to be up on all of these trades as soon as we make them. Thank you for watching, and I will see you in the next one.